Simplicity is never a matter of circumstances. Simplicity is always a matter of focus. Ann Voskamp, and Ann is correct. We agree with her. Simplicity is always a matter of focus. It does not matter what's going on in the market. It doesn't matter how crazy and volatile things are. We keep things simple, and we use the price percent oscillator mainly to help us make our decisions, and those are primarily based on weekly vertical crossovers. Why? Because it's accurate. If you look at our charts, how many times in the past have we been faked out by wrong weekly vertical crossovers? Very, very rarely does that happen. That's why we use them, folks. It's simple and it works. You can do it on the Qs. That is, again, the NASDAQ 100. The first chart was the S&P 500. You can do it on bonds. And you can do it, my friends, on gold, and it works over and over and over again. If it didn't work, we wouldn't do it. That's why we do it. And can it be this simple? Can it be this simple? It can be this simple. That's why we ask you to train with us every day, 10 to 15 minutes. Learn how these charts work. Understand the mindset and the simplicity and the focus on simplicity. Because you go listen to other people who want to sound smart and talk about all the different indicators. We got a long list for you. Oh, you can learn what the detrended price oscillator is, the ease of movement, the elder ray bull power. I don't even know how you say Dochian channels, elder force index, the Elliott wave theory. You can go through all these things, and do they all have a potential use? Yeah. But you know what? They can also be used to just confuse you and not allow you to separate the signal from the noise. Because there's a hell of a lot of noise out there, folks. Just tune in to any of the news channels. I don't encourage you to do that, but if you do, you'll hear everything. You'll hear people 1 hour say stocks are going to crash. The next hour, stocks are going to soar. The next hour, bonds are going to crash. The next hour, bonds are going to soar. Next hour, gold is going to go up forever. Next hour, gold is overbought and is going to go. I mean, it's any and everything. The only thing that matters, my friends, is what you see on the screen. For those of you listening to our popular podcast, you're listening via audio. All I'm looking at is price movement. That's what matters. And all of our indicators are based on price movement. Price movement is reality. Everything else is just people pontificating, people trying to confuse you, all sorts of things. Because friends, if you listen to what you hear every day and you trade on that and invest on that, you will quickly go broke. It's like a belly button. You know, everybody has one. Everybody has an opinion about what's going on in the marketplace. Doesn't mean they're correct. Now, let's jump first into the S&P 500 as we always do. As I pull that chart back, you can see how far we are above the 200 period moving average and above the 50 period moving average, but you can sure see the hammer down on this week's candle. A weekly vertical crossover looks like it probably will happen when the candle finishes drawing. When's that? Weekly candle always finishes drawing on Friday, so that may be happening. Derivative oscillators negative, price percent oscillators heading down, big red down candle. Let's go to the 2-day chart, see what it tells us. We see two pretty strong down candles, but look, the low actually was reached on the prior 2-day candle representing price movement on Monday and Friday, not on the latest 2-day candle representing Tuesday and Wednesday of this week. So again, things are slowing. You'll see more of that when we go to the 4-hour chart. But of course, derivative oscillators gaining downward momentum. Price percent oscillator heading down, not at the same angle it had been, but still heading down quite strongly. We go to the 4-hour chart. What do we see there? We see things sort of leveling out over the last 2 days, don't we? We have 4 candles there, and we can see where things bottomed back on Monday afternoon, and then Tuesday and Wednesday sort of sliding sideways. Price percent oscillators heading up a little bit. Derivative oscillators still negative, but losing lots of downward momentum. Price is well below the 2-day trend line. So again, we'll just continue to watch, see how the week wraps up. I still think we'll have a weekly vertical crossover, but does it matter what I think? No, it matters what the charts show us when that candle finishes drawing. Now, we go to the Qs. That's the NASDAQ 100 down 0.54%. I'm sorry, up 0.54%. Listen to this, though. S&P 500 up 0.06%. So the NASDAQ was up quite a bit more for the day. Still a strong red down candle. Price percent oscillators heading down. Derivative oscillator, however, is flipped from red to green. What does that mean? Does that mean there's not going to be a weekly vertical crossover? No. Our dispositive call is always based on the price percent oscillator, but we like to see the derivative oscillator be red when there's a crossover going down. It just portends more favorable movement in the same direction we have learned over time. Go to the 2-day chart. Again, two strong down candles. Still haven't, though, in this latest candle, it didn't reach a lower low than the prior 2-day candle representing Friday and Monday. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. What does a 4-hour chart show us? Well, of course, again, very similar to the S&P, a sideways slide in effect. Derivative oscillator is losing downward momentum still. Price percent oscillator still negative, but again, losing that downward momentum at this point. But it's just the 4-hour chart. Of course, after all that down movement, we would expect the market to pause a little bit, which is what we are seeing happen. Is it going to then turn around and shoot right back up? Don't know. We're going to let the big charts lead us in the right direction, and we'll make that call at the end of the week if indeed there are weekly vertical crossovers on the Qs and the NASDAQ 100. Let's go to bonds, away from stocks. What do we see going on with bonds? Well, of course, we had things pull away, had a weekly vertical crossover going up at the end of last week. And what do we have happening? Well, what do we see happening? Remember, we had that prior crossover going down, and then with all that up movement in bonds, it pulled it right back through. That, my friends, was a false crossing. But did we trade that? We never had confirmation on the 4-hour chart, did we? It just didn't do it. And then it pulled right back through. Very rare. First one we've seen in quite a while, but it did happen. And then what did we do? We looked for a jumping in point. We found a beautiful one, did we not, on Friday afternoon? And again, that was somewhere, let's see, it was Friday afternoon, the 2nd of August. It was our experimental practice trade at 136.29 at 355. We've done quite well in that so far this week, have we not? Yes. Looking quite beautiful. Again, nice big green up candle, up for the day, just a little bit, 0.04%. We'll see more about what's going on in those shorter terms as we drill down, but that price percent oscillator is heading up, derivative oscillator gaining upward momentum. Go from the weekly to the 2-day, and of course, we see things. I'm going to move the 2-day crossover. Oh yes, we can see that as far as the wick goes, the wick on the latest chart much higher than the prior wick, plus the body of the candle. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up about the same angle here for the last 4 days, so that's looking quite nice. And we go to the 4-hour chart. What do we see there? Interesting. Pay attention, of course, as to what happened at the end of the day. Bit of a pullback. Things had reached much higher in the morning, and then sort of a settling off at the end of the day. And very hard to see. Well, yeah, we're just still, again, things moving up. On the price percent oscillator, I mean, I'm trying to see. It looks like maybe that flattened. It's hard to tell. I can't pull back enough to actually see. It looks like it flattened, but again, strong up movement in the morning, maybe a flattening in the afternoon. Price percent oscillator is there. Derivative oscillator losing downward momentum, but sort of a weird, quirky candle there in the afternoon. We'll see, again, watch how the markets open in the morning and how they sort out. But that's where we are as far as bonds go. And lastly, we go to gold. What do we see happening with gold? Of course, gold crossed over going up back in June. And of course, we had some quirkiness with gold, but boy, did it super accelerate here over this last week. Gold is up for the day 1.52%. It was up quite a bit higher during the day. That's where it ended up. Derivative oscillator still losing momentum, but that price percent oscillator, all important price percent oscillator, moving up. Actually, I wouldn't call it a hockey stick move up, but it is moving up stronger at a steeper angle. And again, nice big green open box candle. Look at the 2-day chart now. This was the one that we did the little experiment on, and I'm going to look at my notes here so I can tell you what it was. We looked at that 2-day chart crossing over on Monday to see if we could find a jumping in point there on gold with that strong move after the 2-day had been going negative. And of course, what did we find? Well, when it crossed over, we looked for a jumping in point Monday afternoon at 3:55 at 137.82. That was Monday the 5th of August at 137.82. And of course, we've reached the highest high at 142.47. So again, not bad. We'll continue to keep our eye on things and see how that plays out. Again, something that we're experimenting with. We can do practice trades on everything all the time, can't we? I encourage you, keep learning as these markets evolve and move and change, as we are in some uncharted territory with negative interest rates and in Europe, and what we're seeing with the quantitative easing we've experienced in the past, with all the money that's been pumped into the system, with the federal funds rate being as low as it is and probably going lower, all the inflationary aspects. You've just got to keep up and make sure that your methods work in today's world. So that's an interesting experiment. Again, we see things continuing to accelerate now. Let's dig in and see what we saw on Wednesday with the 4-hour chart. We had a big green up candle in the morning, and again, about the same spot in the afternoon. Price percent oscillator reflects that, moving off some of its higher movement, as does the derivative oscillator, losing some of its momentum. Again, this is an open box red candle, just sort of a cautionary tone. It's not a red down candle, a solid red down candle, but again, we'll just pay attention to that. And of course, after all this up move in gold, you could sure expect gold to digest some of those gains. Maybe it'll continue on, maybe it won't. But again, we'll let the charts lead us. That's where we are, folks, as we end the day on Wednesday, go into Thursday. Still 2 more trading days this week. Hopefully, we're going to have weekly vertical crossovers going down on the NASDAQ 100 and the S&P 500. For those of you saying, is that dude crazy? Why would anybody want the market to go down? That's because the special training we have for you in the show notes on inverse funds tells you exactly why. There are inverse ETFs that actually move or set up to move percentage for percentage up when the underlying ETF, like the S&P 500 and the NASDAQ 100, go down. Just a little level of sophistication that allows you, if you can read the charts, to be able to make virtual money when the market's going up or down. Remember, we're not a stock calling service. We're an education firm. We want you to train with us. Figure this out. We've got great links in the show notes to PDFs that will allow you to print out our weekly market worksheet, daily market worksheet, trade worksheet, where you can keep up with all that you're thinking and doing. It only makes sense, folks. That will supercharge your training. Of course, the biggest supercharger of your training is to buy our book. You want to support the channel, the work we do here for free for you every day. Purchase our book, Charting Your Way to Wealth. Patreon members, don't forget we have our live question and answer call-in session next Wednesday, a week from the day I'm recording this. That is going to be on the 14th of August. We want to have you with us 12:30 Eastern Daylight Time. I'll be sending out the call line numbers and all to you. And again, folks, you want to be a Patreon supporter and get all the special benefits. All you got to do is follow that link in the show notes. You can be one too, and you can be involved in that call next week. Plus, we'll review the ETFs and the stocks you'd like us to look at as well as all the special training, short chart training, Bitcoin chart with that training, long-term training. We got all sorts of great stuff for our Patreon members. Check it out. You can see a link in the show notes. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.